Good evening, everyone. I'm back, JC De Guzman here for our top 5 gainers and top 5 losers analysis for Tuesday, May 14, 2019. I will give you my technical analysis followed by my recommendations and overall sentiment for these 10 stocks for tonight. And this is in preparation for tomorrow's trading, of course. And let's begin with MACAY or MACAY, however you'd like to pronounce that. MACAY or MACAY closed on Tuesday at 11.90. Support is at 10 pesos per share. It managed to break above the previous resistance at 10 pesos per share today as well. And because of that breakout, it converted the previous resistance into its current support. And the acting new resistance now, not literally a new one, but still a historical resistance, is near 12.66. Okay? I'm seeing a golden cross, meaning to say MACD already crossed above the signal line. Of course, that's quite expected because number one, MACAY was consolidating for such a relatively long time already. So when a stock is consolidating for a relatively lengthy period of time, expect that the MACD is not that far from the position of the signal line. So it's at the brink of crossing above the signal line or above or below the signal line when the stock is consolidating for a relatively lengthy period of time. So just one ascent or descent in price will make MACD cross above or below the signal line. Okay, so that's quite expected. So it's not a surprise to me that MACD crossed above the signal line after MACAY registering a significant ascent in price after being in a consolidation mode for quite a relatively lengthy period of time, just like what I mentioned a while back. So now, let's take a look at volume. Volume is obviously bullish, and it's also registered. It was registered above the 10-day volume average of MACAY or MACAY. And foreign investors bought about 238 million pesos worth of shares today, and for sure, they are the ones, or they were the ones in charge, let's say, for the ascendant price of MACAY today. And for the 4-point criteria, it's a green candlestick. It closed above the VWAP of 11.12, and it's a green volume bar. And for sure, the trade and volume distribution chart of MACAY or MACAY is definitely closer to the intraday high than the intraday low. And that's what we see here. It's between um, 11.5 all the way to 12.42. So that's the dominant range. But just a personal disclosure or reminder about MACAY. I'm not interested in trading this stock. Number one, it has a serious liquidity issue. In layman's terms, I'm seeing some irregularity or irregularization or irregularity, that's the better word, better adjective to choose to define or describe the volume, day-to-day volume of MACAY. So it's quite unpredictable. MACAY has an unpredictable volume. For example, for today, for a very long time, okay, for a very long time, MACAY has not been registering a volume like this, like what was registered today. So we don't have a strong basis. We don't have a strong data-driven reason to say that that this ascending price of MACAY is sustainable. I'm not confident to say that despite the presence of our 4-point criteria, and even though my 10 SMA and MACD combo has been met, simply because I don't have or this towering volume for today did not have or does not have a recent historical equivalent for the size of volume for a size of volume like today's volume. So, well, as far as today's price action and volume is concerned or are concerned, it's technically bullish, okay, but for me, do I find MACAY interesting for short-term trading purposes? Nope. I'm not going to. MACAY would be, perhaps it would be in the back burner when it comes to considering which stocks I'm going to trade for short-term trading purposes. So in other words, I'm not interested with MACAY for short-term trading purposes. But I'm bullish as far as the price action and volume for today are concerned. Okay, next stock in the list, CHP. CHP closed on Tuesday at 2.76. Support is still at 2.21. Resistance is at 2.88. It came with a strong volume above the 10-day volume average. Foreign investors continued their consistent net foreign buying days today, and they bought about 36.4 million pesos worth of shares. MACD just its has continued its bullish ascent above the signal line. And I'm also seeing a confirmation of a strong upward momentum based on my DMI, or directional movement index, histogram. Okay, so for the 4-point criteria, do we see a green candlestick today? Yes, we do. Did it close above the VWAP of 2.72? Yes, it did. Do we see a green volume bar that is at least above the 50% of the daily 10-day volume average? Yes, we do. How about the trade and volume distribution chart? Let's open it. So yes, it's closer to the intraday high than the intraday low. The dominant range is between 2.68 to 2.8. So I am bullish on CHP, even though I'm not yet seeing a perfect bullish alignment among its three simple moving averages. It's already above all of those three SMAs. So perhaps a breakout above 2.88 will pave the way to the alignment of these three SMAs into a perfect bullish alignment. But until then, okay, nonetheless, I am bullish on CHP on a short-term scale. Okay, if you bought CHP near 2.2, you can either hold your position, mean to say do not do anything, sell once your trailing stop loss once your trailing stop loss is hit, or you can top up, mean to say you can add more shares, but don't buy as usual. Do not buy at any price. Position your buying price within the dominant range that I mentioned a while ago. Okay. Now, if you do not have CHP, I'm still bullish on the stock, but before you do a test buy within the most dominant range that I showed a while back, make sure that you calculate your reward to risk ratio in connection to the distance of the current price to its immediate support and resistance level. How do you calculate your reward to risk ratio? Go back to your My Account tab on your account with Equilist Analytics and then read the quick start guide. I wrote the formula there with examples. Okay, if you're happy with your reward to risk ratio, then you can do a test buy. You do a test buy within the most traded and most voluminous range. That trade and volume distribution chart that I showed a few minutes ago, or a few seconds ago. Okay, next stock in the list we have PHEN, PHEN. PHEN closed on Tuesday at 2.08. Support remains near 1.64 for its resistance. I'm going to use a 61.8% of the up Fibonacci extension as its resistance, which is near 2.32, this line here. Okay, so MACD still bullish. I'm also seeing a confirmation of a strong upward momentum based on my DMI histogram. A friendly reminder, RSI is already above. It has already entered its classical overbought level. So at this point, perhaps if I had PHEN, I would just hold my position and let the ascend in price too. I would just ride the momentum. I mean, perhaps I'm not going to consider adding more shares, or I'm not going to consider topping up onto my position on PHEN at this stage. Was any moment from now, a massive selling activity may take over, or may it could be interesting thing that PHEN traders would love to do at any moment from now. So, okay, there you go. So, I'm bullish on PHEN. Now, if you do not have a position on PHEN and you are relatively new in trading, maybe you have just opened your account a few weeks or 1 to 3 months ago, I'm not going to encourage you to trade PHEN because we don't have uh, it's quite far. I'm referring to the historical resistance of PHEN. It's already quite far. So, but it's up to you. If you are a high risk trader, let's say even though you are relatively new into short-term trading, if you consider yourself as a high risk trader and you have some quote unquote play money to use for short-term trading purposes, then you can do a test buy within the most traded and most voluminous range that I'm going to show you a few seconds from now. Okay, but just buying tranches. I do not recommend buying PHEN or any stock in a lump sum manner. So don't go all in. Do not go all in. This is the most dominant range of PHEN. So it's between. Okay, it's between. It looks like it's evenly distributed, but if we will just have to pick the most dominant range, that would be between 2.0 to 2.14, 2.0 to 2. Yeah, we can consider 2.15. Okay, or maybe all the way to 2.17. And I think the the dominant range is closer to the intraday high than the intraday low. It's quite balanced, I think. It's relatively balanced. It's quite tough to decide whether the dominant range is closer to the intraday high or the intraday low. Okay, based on how our trade distribution and volume distribution charts look like. So it's all the more now that I'm not going to consider topping up on my PHEN position if I had one. So again, for those who are still in the planning stage on whether you would like to trade PHEN or not, consider that observation as well. Consider that thing that I've observed on PHEN. Consider the fact as well that RSI has already entered the classical overbought level. Okay. All right. Again, let me just show you the resistance level of PHEN is at 2.32. I'm bullish on PHEN. Next stock we have COSCO. COSCO closed on Tuesday at 7.18. It seems that it translated 7.11 as its bottom, but let's see if it will continue to register green candlesticks for the rest of the week. Nonetheless, the support is near 7.04, resistance is at 7.51. It's still below the 10 SMA, however, and I'm not seeing any sign of a bullish convergence between the MACD and the signal line. In other words, MACD is still below the signal line, moving towards the southward direction. Okay, on the DMI histogram, it shows here that the downward momentum is still relatively strong, meaning to say today's green candlestick wasn't enough. It wasn't enough to bring the average directional index below the 25-point level. Okay, it wasn't enough. Maybe if COSCO will register 2 to 3 more green candlesticks, maybe that would be the time when um, the ADX or this black line over here on the DMI histogram, the ADX line, the black line, would register below the 25-point level, and by that time maybe the negative DMI, which is the red line, would be touching the positive DMI, which is the green line. So when that happens, we might be able to see a crossover, we might be able to see the positive DMI crossing above the red line, which is the negative DMI. So that's a sign of a bullish reversal when that happens. But we are still relatively far from seeing that scenario. So we have to wait and see. Be on a wait and see mode on COSCO. Nonetheless, MACD, let's see. Let's check our 4-point criteria. Do we see green candlestick? We do. Did it close above the VWAP of, what's the VWAP? Let's check. Above 7.13? It did. Do we see green candlestick? Yes, we do. And it's almost more or less above its 10-day volume average. How about the trade and volume distribution chart? Here. So the dominant range has been between 7.04, 7.1 to 7.04. However, there's this, it seems to me that COSCO was 7 point, yeah, it's closer to the intraday low than the intraday high. So what does that mean? What does that mean? The bears did not give up on the bulls so easily. Okay, they did not give up on the bulls so easily. So it's all the more that we have to stay on a wait and see mode on COSCO. Okay, because the first three criteria are present, they are true, but the fourth criterion is, I'm not quite bullish on that because we saw it. It's closer to the intraday low than the intraday high. Okay, numbers don't lie, as they say. Nonetheless, well, maybe that's another reason why. Another reason why I'm not that bullish on COSCO is that it's still moving below the 10 SMA. So yes, we do see a green candlestick, but it's quite distant from the 10 SMA. Take note that the 10 SMA is positioned at 7.38. The last price is still at 7.18. Yes, so what's my overall sentiment on COSCO? I'm neutral. I'm neither bullish nor bearish. I'm neutral on COSCO. So be on a wait and see mode. By the looks of this chart, I'm hoping that none of you bought COSCO, because as far as this chart is concerned, let's say from March onwards, I do not see any attractive buy signal from March 2019 onwards on COSCO. So with that in mind, I'm hoping none of you have COSCO. If you traded COSCO, that would be before March, maybe somewhere last year, December last year, and then you should have sold between 7.5 to 7.9. Okay, 7.5 to 7.9. That range should be your selling or your selling range, but not now. Okay, so if you don't have COSCO, good. So be in a wait and see mode. So once you've seen the 4-point criteria being present, it would be better if our 10 SMA and MACD condition becomes true, or MACD SMA 10 SMA and MACD combo becomes true. That would be better. So once those two filters become present or true, then that's a logical time. That's the best logical time to do a test buy. Again, not at any price, but within the most dominant range. If you don't know how to do your own trade and volume distribution analysis, you can always post a request inside our private clients forum for free. Next stock, we have SCC Semirara. This is part of our one of the index stocks. SCC closed today at 22.5, support is at 21.5, resistance is at 23.24. We still see red bearish volume bars. Okay, and it closed below its VWAP of 22.68. On the other hand, foreign investors bought about 41 million pesos worth of shares Unfortunately, I'm not seeing any bullish convergence, sign of a bullish convergence, any formation of a bullish convergence between the 10s, between MACD and the signal line. I'm not yet seeing that sign. Okay, I think once the price breaks above 23.24, I think by the time the positive DMI will have already crossed above the negative DMI. Well, let's see tomorrow. Let's see tomorrow if SEC will register a green candlestick. Okay, but I'm telling you that as far as volume is concerned, I'm bearish on SEC since May 8th, 2019. But for what it's worth, for whatever it's worth, let's take a look at the trade and volume distribution chart. So the dominant range is between 22.3 all the way to 22.95. It's still closer to the intraday low than the intraday high, and I am bearish on SCC. I am bearish on SCC. Let me just repeat that. If you don't have SCC, I would suggest that you wait for a pullback closer or maybe below 21.5. It might just trade sideways between 21.5 to 23.25 from here, unless we do see signs of, unless we see some signs of reversal. For now, I'm not seeing any signs of reversals on SCC's chart. Maybe once it breaks above, again, above 23.25, then we might see some formations of some bullish convergences with some of these indicators. Okay, so don't buy SEC just yet for short-term trading purposes. Now let's take a look at Bloom. Bloom closed on Tuesday at 10.4. Support remains at 9.32. Resistance is at 11.12. I'm also seeing no formation of any bullish convergence of whatsoever on MACD. The upward momentum is still it's very near from the DMI. The ADX is so near the confirmed strong downward momentum on DMI, 1.5 points away from that level. But as far as the position of the bears is concerned, they are in control right now. Okay, they are in control right now, and RSI is about to high five with the classical oversold territory for RSI. Maybe that's somewhere near 9.32. Okay, maybe that's somewhere there, or maybe at 10 pesos per share. 10 pesos flat. Let's see. Let's be on wait and see mode on Bloom. Let's not hurry. The dust has not settled down just yet. As you can see, volume is still relatively high. So, meaning to say, those who have Bloom have not thrown up everything that they have decided to throw up rather. So they still have some shares to vomit. So let's not rush into buying or trading Bloom. The dominant range is between, let's see, it's between 10.32 all the way to 10.48. 10.32 to 10.48, and I think that's closer to the intraday low than the intraday high. Although it looks like it's in the middle. Yeah. So I'm bearish on Bloom. Don't buy it just yet. Let's just enjoy seeing dropping closer to 9.32. Well, of course you can enjoy that if you did not respect your trailing stop loss. By now, just by looking at this chart, I'm hoping none of you is still holding onto your Bloom. Okay, unless you have a risk percentage of 100%, and that's being insane already. Okay, now let's take a look at RRHI, another index company. RRHI closed on Tuesday at 70 pesos flat. Support is now at 65.75. resistance is at 71.30, so it broke below its previous support at 71.30, making that level as its resistance area. Volume is still strong above its 10-day volume average. MACD shows no signs of any bullish formation, bullish convergence with a signal line rather. RSI is still near its classical oversold territory, but let's see if RRHI will recover its position above the 71.30 level, and if not, it might just drop all the way to 65.75 level. Let's see its other historical resistance areas. So that's how I got the 65.75 level. It's historical resistance that is rooted all the way to September 2015. Okay, there are two ways on how you can uh, delegate or find resistance a support level for RRHI. It's either you base it on its historical resistance level, or you draw a down Fibonacci and plot the support level on its 61.8% Fibonacci retracement. DMI is telling me that the downward momentum is relatively strong for RRHI. Okay, let's take a look at its trade and volume distribution chart. The most traded and most voluminous range is, let's see, where is it? Somewhere here. Somewhere between 65.85 all the way to 71.2. So it's quite a lengthy range, right, for RRHI. Okay, but I'm bearish on RRHI, so don't trade it just yet. Besides, it's still below the 10 SMA, and I'm already seeing a perfect bearish alignment among its three simple moving averages. So wait for a pullback to, as much as possible, closer to 65.74, as much as possible. So don't touch RRHI just yet. MRSGI, Mrs. G. It closed today at 2.65. Support is at 2.53. Resistance is at 3.11. Volume is still relatively strong, bearishly strong. I'm not seeing any formation of a bullish convergence between MACD and the signal line. RSI is still busy moving towards the southward direction. That means a bearish one. And based on the DMI histogram, the bears are still in control. The downward momentum remains strong. Okay, so let's take a look at the trade and volume distribution chart of MRSGI. The dominant range is between 2.53 to 2.72. Needless to say, that's closer to the intraday low than the intraday high. So don't buy MRSGI just yet. Wait for it to stay much longer, closer to 2.53 if not below that level. Only consider the idea of doing a test buy once our 4-point criteria are present, and better if our 10 SMA and MACD combo becomes true. Unless until those two things appear, one or two of those things appear, then postpone the idea of trading MRSGI. Next stock we have DMW. DMW closed on Tuesday at 10.10. Support is at 9.61. Resistance is near 10.98 or 11 pesos per share. It's already moving below the 10 SMA, and I am seeing no, it's not yet a perfect bearish alignment among its three SMAs. Nonetheless, it's a towering bearish volume for DMW today. MACD is still busy moving towards the southward direction below the signal line. There's zero visibility of a formation of a bullish convergence. So no sign of any formation of a bullish convergence. Negative, still bearish. The DMI confirms the strong downward trend for DMW. Let's take a look at its trade and volume distribution chart. The dominant range is between 10 pesos per share all the way to 10.52. That's closer to the intraday low than the intraday high. Don't buy DMW just yet. Don't enter. Don't do a test buy yet. Wait for a pullback closer to 9.6. Last in the list, we have SurePass again. SurePass, like what I said in the previous video, SurePass is at the point of, investors or traders of SurePass think that it's at the point of getting close to bankruptcy. So it could hit as low as zero point 0.5. Besides the retracement here that I see here, down Fibonacci extension is at 0.38. It's even more bearish than my zero point 0.5 estimate. So I mentioned in the video when it was at 1 peso flat that SurePass could go as low as below 1 peso per share. And that insight is now a reality since it closed at 0.94. The acting resistance is at 1.05. No sign of any formation of a bullish convergence among these technical indicators. FYI to that. And the most traded, most voluminous range is between 0.92 to 0.95, closer to the intraday low than the intraday high. I'm bearish on SurePass, just like what I said over and over again when it made it into our top 5 gainers and top 5 losers analysis video. And it's the same bearish sentiment all up to today. Okay, maybe even up until tomorrow, up to tomorrow, until Friday, unless a bullish reversal will happen overnight. Okay, but all right. So I am bearish on SurePass. Don't trade the name just yet. So there you go for our top 5 gainers and top 5 losers analysis for May 14, 2019 in preparation for the next trading day. Again, my name is JC De Guzman. I do hope this was helpful for you. Thank you.